a lot of raising going on. The markets may be slightly down from previous highs, but there's a lot of VC money being thrown about, and crypto custody firm Fireblocks raising $550 million and $8 billion valuation. The Series E round was co-led by D1 Capital Partners and Spark Capital and included Alphabet's independent growth fund, Capital G. Joining us now is Fireblocks CEO Michael Shaulov. Welcome, Michael. So I am curious, was the money locked in before or after the crypto markets tanked, and would it have made a difference?
First of all, thanks for having me. It's a good question. I think we basically started to, we signed a term sheet somewhere at the end of November. I don't exactly remember what was the price back then. To be honest, when we started the company, Bitcoin was at
its peak.
I don't think it was at a peak, but I always tell people that when we started the company, Bitcoin tanked into 3,500, right? So I look at the prices right now, I'm like, I don't know, it looks amazing.
So, Michael, congratulations on the raise. So where's been the growth story for you guys in terms of custody? Like, who's using it more and more? Where's your growth coming from? When you went out and raised that money and you were showing your growth models, where did it come from?
Yeah, that's an excellent question. I mean, Fireblocks was basically, or currently is, the leading custody provider for the crypto native ecosystem. We service all the big OTCs, market makers, exchanges, retail platforms such as Revolut and BlockFi and Celsius and so on. But interestingly enough, over the last over the last 12 months, we've seen clearly an increase in the appetite of big financial institutions. So clearly, Bank of New York Mellon that we partnered with over a year ago, and we are working to operationalize that project. There are quite a few other big and smaller banks that we're working with, but in the last couple of months, we're also seeing quite a lot of appetite from, I would say, non-financial institutions that are coming in. So you see gaming companies are really interested in that, marketplaces that are really interested in that, and I just think that the entire market opens up for digital asset-based technology, not actually because of the appetite to trade Bitcoin up and down, but actually because of the real-world use cases in the form of NFTs, in the form of payments, which are really tokenized assets, tokenized securities. There is a lot of appetite in those areas as well.
Michael, while we're talking about your users, I'm curious about the global distribution. Where are most of your customers? Are you seeing any interesting trends, any interesting changes on that front?
Yeah, we do see a lot more and more in say Asia, but so our global distribution is about 40% US, 35, 35 going maybe to 30 in Europe, and Asia coming from 25 to 30, right? So Asia is really increasing. We just opened up, for example, an office in Australia where we just see this really interesting demand. We see a lot of interest right now in Latin America, where we're planning to allocate more and more resources. So it's really global, to be honest. You guys just talked about Russia. Just came out of a call with some players over there. Again, there is, it's clear there is a lot of regulatory dust in the air, but I think it's all sort of trending into the right direction.
So, Michael, $8 billion. Of course, it's a quite a big valuation. So, what multiple were you using on what metric to come up with that number? What was it on the income statement? Is it based off of certain assets? How are you valuing? How are your valuations? What were they based on?
Yeah. So first of all, our business model is actually much more of a SaaS company. So our business model is sort of this annual subscription based on the amount of activity, on the amount of transactions that our clients are using. This is sort of the primary business model that we have. So it's what you would consider ARR, right? Annual recurring revenue. And this is basically trending on, usually the way that companies in this space are valued is on a forward multiplier of that. And people were looking basically a year, 2 years ahead in terms of where we're going to be from a revenue standpoint. I think the most exciting thing for us is actually the growth. In 2021, our client base grew 800%. Our revenue grew 600%. We are targeting another 300% growth this year. So overall, the metrics and the and the multipliers look reasonable within what you see in the market.
Do you think that to that point you were saying that it looks reasonable in the market? Do you think that overall we're starting to see kind of lofty valuations? That's a complaint I've been hearing from quite a few VCs.
Look, I mean, we definitely far from being the player that raised in the highest multiplier in this space, but I do think that there is a lot of appetite from. Let me take a step back. When you look at the type of VCs that actually invested in our recent round, right, you would see their names that this is actually their first investment, right, into crypto. So I think that there are a lot of mainstream VCs that sort of through 2019 and 2020, because of the crash back in 2018, and their sort of unwillingness to participate in this ecosystem because of the ICO crash, right? They didn't go into this market, and now they are catching up because they see the growth, they see that it's real, they see that everyone are building here to really revolutionize the financial system, and now they don't want to miss out, right? So it's true that there is a slight FOMO in terms of getting into the right companies, and therefore there is some. I would say willingness to give up a bit on the valuation, but I would say that it's very, what we've seen this round, which was actually, we were not raising. It was a round that people basically approached us to raise, and therefore you see a lot of VC money sort of coming into the space and seeking for the best companies because they don't want to miss out.
Mm-hmm. So what are you going to do with the money? And you mentioned a couple of regions. Which ones are the most excited about building out and enthusiastic about building out crypto infrastructure?
Yeah, so I think the regional expansion is definitely an important avenue for us for growth. And most importantly is actually our allocation of resources into two areas. One, given the fact that we grew 800% from a customer standpoint back in 2021, we are still catching up in terms of all of our customer support, customer success infrastructure, solution architecture. So all the internal resources that we need to have to better support our clients and make them successful, right? Because we are in the base of the infrastructure of what they need. It's a fairly technical product that in terms of how people are using us. So, there is a lot of hiring and training going on there. The other aspect is really investing in the frontiers that we are pushing into. So we are putting a lot of resources into, pushing for, we became the number one player in terms of DeFi access for institutions. So both to the permissionless pool, to the permissionless protocol using our Wallet Connect and the browser extension and API, but also, as you guys probably familiar, we launched Aave Arc with the Aave protocol for the institutional space 2 weeks ago. So there is a lot of R&D investment that is going on into DeFi and improving the security and the functionality over there, and also making some really interesting stuff around the regulatory aspect, NFTs and payments. Those are the three areas that we really looking to increase our basically product and enhance it over there.